Today I'm going to show you the A plus of A plus setups. These are setups where you should be dropping fucking max size. Now, they're a little bit rare. They don't come quite too often, but when they do show up, the stars align and you go the fuck in. All right, y'all. So a couple things will be going into this strategy to make sure that it is 100% A plus. And if all the stars align, again, we drop our max size. So I'm slowly been increasing my size as this year has gone by, getting used to the whole Trump market, the whole craziness that's going down. I kind of been increasing my size slowly but surely, especially when the conditions are optimal, right? I'm not trading prop firms anymore. I have been having a great time trading my own personal funds again and kind of going back to just growing my main account, not having to deal with any rules, payouts, getting denied, that kind of bullshit that takes up extra time, especially with the firm I was with. But Peak Funding is having a massive sale right now. I'll plug that down below. And without further ado, let's get right into it. So the couple of things that this is actually going to require, right? Number one, we're going to go ahead and always be following with this kind of A plus setup, the overall trend, the overall sentiment, the overall structure of the market, which in most scenarios, right, will be consistent and be followed for a good bit of time, right? There's going to be times where you kind of get, massive news reaction or when the structure is actually shifting that kind of go a little against this and make it obviously not 100% A plus. But if you're already confirmed a shift in structure in the longer term time frame, it's not A plus if you're not going with it. But if it just shifted in the longer time frame and you're still going with it, that's going to kind of be a little bit unuseful, but rare scenario. So let's just go ahead and drop into it. So the first easy things that most of y'all that's been watching me for a while should already know is I like to follow the overall trend of the market, especially with the time frame I'm trading. I'll be looking at the 4-hour chart, right? And no need to even explain this, the 4-hour chart right now. I'm going to draw a trend line because y'all love trend line. Looks very, very bullish, right? Very bullish. I need to explain that. So that is the first criteria for this to actually be full size and to be A plus for me. I want to be with the overall trend of the market, right? Then I'll go into the 30-minute as well to kind of see how that is. If the 4 hours bullish and I see a 30-minute downtrend into a demand level, we'll talk about that in a second. I'm all for it, right? But the 4 hours bullish and I see a 30-minute bullish structure as well about to break supply, I'm all for it as well, right? So that's the first thing we're going to look for. The longer term time frame structure, sentiment, or bias of the market, right? Now, the next thing we're going to go ahead and be looking for is going to be the volume analysis, volume by price. So for this, I'll look from the 4-hour all the way back down to the even 5-minute chart. So I don't want to see anything crazy happening, as for instance, right here where we have kind of higher highs being held, right? But volume is incredibly weak and kind of tell that lend to a little bit of a shift, a little bit of a sell-off, right? If volume is incredibly weak for me, like right here, right? Say the structure is bullish and volume is incredibly weak at new highs, erased, gone, right? Not interested anymore. But if volume is picking up as we're holding higher prices, that is the second condition I need from every time frame, right? So as you can tell, before the sell-off, we had dead volume, right? Great use of confluence, right? You can tell when we were kind of started to consolidate at these highs, had one candle with high volume and the consolidation back to behind with low volume, right? Same thing right here. You kind of tell most of this consolidation was low volume, right? So that's something that I'm looking for right here, low volume before a sell-off. So if there's low volume consolidation and I'm main buys, main structure is longs, that gets wiped out of the A plus. So first two things, pretty simple. We're going into a little bit more of a different scenario now, right? The next thing is going to be the supply and demand level. So for instance, right, during this whole little rush before the structure actually shifted or we had some news, recently the market's been a little bit more difficult to trade, but while we were having this beautiful green rally, right? 4-hour levels are super, super key. They don't get hit too often, but when you have a 4-hour level that's being tested, it is incredibly strong. And for me, I will definitely be looking to have a little bit of extra confidence in the setups I take on the 4-hour time frame if those levels are active. But for me, even a 30-minute will work. So pretending the full, or I guess since this is a little Iran-Israel news kind of sent us down, kind of making a new low, grab some liquidity back up, potentially making a lower high into a potential new lower low, shifting the structure to bears. But we'll see. We'll talk about that later when it happens, right? But before that happened, obviously structure of the market was pretty bullish. So I will be looking for an A plus setup, either breaks of supply, right? Or longs off of demand. So for me, what that means is if we have a supply level, I would look for a break of that supply level for longs, or if we have demand, I would look for a bounce off demand for the move up, right? And again, when structure shifts like it does right here, shit gets wiped out of the picture. You'll take some losses, but this is honestly, if you only play these A plus setups, this week I've barely taken any trades because the market hasn't given me that much opportunity. I see a lot of people taking a lot of trades where the market looks like this. And if you're not having a crazy strategy where you benefit from this market and you're still taking trades, even if you are making money, like what are you doing, right? What are you doing? But without further ado, let's say before this whole scenario happened, when you had that massive little drop off, kind of just mark that off right here. The market was bullish, so I was looking for bounces off of demand, right? right? That was the first thing I was looking for. Now, again, volume confirmed, right? We need increase of volume, right? As we're making these new highs here, the volume kind of died out. For retest as well, we kind of see the volume where this level was made, volume die out. But one big thing that I like to use, right, is the volume profile. This is just going to show me exactly where the volume is on a daily basis. So every box we see right here is the volume profile for a specific day, right? And this yellow line is the volume profile. So I look to confirm my bias for an A+ setups, right? I want to see the volume profile value area and the volume profile point of control be higher and higher. So every single time we have this day close and the volume point of control and the volume profile show us that this day there was more volume at these higher prices than there was previously, right? Or just in the day in general, there's more volume at the high of the day versus the low of the day, showing me people are interested in taking transactions at the higher prices for kind of confirming my bias the market is bullish, right? First day where we actually had the point of control and the value area be lower than the previous day, we start to sell off, right? Start to sell off. Now right here, same thing happened, had a little bit of dip. Next day kind of recovered fully, but every single time we see the value area gap up, we see the point of control move up, we know that that confirms our bias, whether it's up or down, in this case, up. So we have the volume profile showing us higher prices at those higher time frames. We have the trend in this current sentiment of the market being incredibly bullish. Now what do we do next, right? Now these are all check boxes, right? The next thing we do is go ahead and drop into the 5-minute time frame. Now, if I'm playing into red folder news, crazy volatile events, or Mr. Trump is speaking, right, or there's war, this gets wiped out. I don't care how good the setup looks or how perfect it looks. I'm not trading that shit, bro. I've been in this game way too long to know that I should avoid certain types of news, certain types of days, certain types of market reaction. Now, for me, this day recently, we just had last Friday, it was a little crazy because usually after a major move we made overnight, recovered a little bit right before the open as well, we don't see much swings, right? We see kind of a consolidating market, but this time was different. So, I mean, follow my rules every single time. It could have been choppy, could not have been. I didn't trade Friday. I knew I wasn't going to trade Friday because of what happened overnight. That's just part of my plan. Part of my rules always keeps me consistent. It keeps me very, very, very disciplined, right? Now, we have most of the check boxes done. The next thing I'll do once this is done, like let's say the day, right, was starting right here. We knew that there was a shift in the market. We knew that, not a shift, that we kept seeing these higher volume at higher prices. We have a very strong trend of the upside going on. Let's just pretend we're going into this day right here, right? I'll then jump on to the 5-minute time frame after making my plan. Volume's up, sentiment is very bullish. You have a demand level. Let's wait for a tap into that demand level to take a position. Now, I'm not only looking for a tap. Again, we're talking about AA plus here, right? So this is right here the day we're talking about, right? Now, overnight, we had a little bit of a pump, then we sold back off into demand. Now, first thing for me and what I would like to do, right, is wait for the structure for these A+ setups to shift just for AA+ into a going with the overall structure of my trades with longs, right? So market right here, 5-minute, after we kind of just held this new low, made a lower high, it's pretty bearish, right? It's pretty bearish. So after this happened, we made a new low, a new specific low. And then for me, what I'd have to do first is either wait for a new high to be made or a new higher low, right? So both these things could happen. So we came in, swept overnight liquidity, or this is the London Open actually. So we swept the Asian liquidity into the London Open. Then right here, we made a new lower high, but right here, we made a higher low. So after this has happened, now I can look for my entry, right? Because my invalidation for me is going to have to be at this new lower high, because I know if my thesis is long, if the volume's up at the higher side, if the sentiment trend is long, we bounce off demand, right? And I'm in the long position. If we make a new lower low, I don't want to be in long anymore. I'm wrong. The market's not going where I thought it would go. So I want to put my invalidation at this new higher low. For me, it's great confirmation that, okay, if the market makes a new low, not going in my direction. If the market holds this new higher low, it's going to go in my direction, right? So that's pretty simple and why I look for that thing. So, or those kinds of things. And again, volume is pretty key right here. Obviously overnight or Asian session or London session, sorry. So you probably might not have been trading this session. Let's see if I can make volume a little bit bigger, but even this volume overall in the longer term, right? We held demand. As we move out of demand, we see a nice spike of volume in buyers, right? And right here, we see a spike in the sellers that failed to make a new low and actually get absorbed. So, and as we're moving back up, we see some buyers start to step up again, right? So again, all kind of extra confirmation for us that we kind of need to really see to move the market up. Now, another trade we took recently, kind of following the same exact bias like 2 weeks ago. Those of y'all that were watching with me live know exactly what's going on, but it was a break of these 55s, right? A break of the supply for a move up into the 90s. So 90s for me were a level of liquidity that we hit perfectly. And a break above these 55s for me was a longer time frame supply. Right? So same thing happened here with the trend, with the structure, with the sentiment, right? And for this instance, we don't have to wait on a 5-minute structure shift. Why? Because the structure, after we break supply, is already on our side. So we break supply, we retest supply, and then we shoot up, right? As we're moving into this level, we kind of see volume start to pick up, we break, and as we retrace, you kind of tell a little bit of seller absorption, a little bit of volume dying out, and this consolidation, as you can tell by this right here. So on the retest, retrace, we want to see volume die out. We want to see price push lower, retrace this level that we broke with less volume, right? That's just great confirmation for us. And then we rode, obviously didn't take the full market up here, but we took a couple points, 15, I think, off of this trade. But again, now that that's all clear, we need to wait on an entry trigger. So I'm not just going to get in, if I see a higher low, because how do I know that's actually going to hold, right? I need extra confidence. So everything I just talked about matches up and makes sense. The next thing I look for is order flow. I'm watching the tape. I'm looking to see a reason for me to press buy or sell, right? Now, currently, when I'm making this video, the market is closed. So let me just see if I can hop into maybe Bitcoin USD, and see if that will load something for us. Because obviously the market is closed, so we're not going to see any data. I could probably honestly just replay data, but we'll try Bitcoin out first to see if it gives us something nice where we can use something as an example to kind of explain to you guys exactly what I'm looking for as an entry trigger, right? A couple different things here. I can actually pull up, some examples here. Let's see. So for instance, we can use this as an example on Bitcoin, right? Right here, let's say the sentiment was supply, right? We were looking for shorts off supply. The structure on the 30-minute, 4-hour was bearish. We have a nice 4-hour level. Let's just say that, during our pop back up into supply, we saw low volume and everything was pointing that it was an A+ short setup, right? Then I'll look at the tape, right? Let's say supply was right up here. We see a seller push into supply, right? Pretty big seller, get absorbed, and the market sells off. Again, we see a seller push into supply, get absorbed, market sells off. Again, supply, absorbed, market starts to dump a little bit more, kind of holding new lows on the tape here. But the important thing for this is this passive order right here. So above the book map, right, we have passive sellers if it's above price. Seeing aggressive selling happen while there's passive sellers, right? Two good confluences for shorts. But not only that, seeing the exhaustion of buyers that are pulling into a passive huge sell offer is a confirmation I'm looking for. It's just basic absorption and exhaustion. Basically what we're seeing here is a passive seller who wants to hold price below this exact level, right? Not a take profit order, right? Because we can kind of see the rejection twice. Now, again, that's why we wait for these A+ offers for the first move first, right? In supply, right? Let's just say right here, supply. We wait for the market to reject supply first so we can kind of see exactly what happened in that price level off order flow, right? So the same exact thing. We're not going to get in short right away for these A+ setups when I'm looking for this, right? Especially since we're waiting on the 5-minute time frame to shift. So kind of shifted right here. Let's use this as an example. Now we saw exhaustion here. Now we saw aggressive seller step up. Next time prices pushes up into this direction. All right, what do we see again? We see exhaustion and we see aggressive seller step up, right? No buyers up here, aggressive seller step up. This is what I need. So after the second close right here, let's say all the stars were aligning, we kind of saw exactly what we were looking for. I would be looking for an entry short right here, right? Now I put my stop loss right above where we have these passive offers. Pretty clear and pretty simple, right? Let's just go ahead and move on to some other examples. So for instance, right here, right? For this example that I use a lot, right? Different kind of example. Right on this one, we see a huge wave of passive sellers, similar to what we just saw. And then again, absorption, right? Aggressive buyers failing to break above this wave, right? And right here, right? We see this, a new low that was held, but during this new low, again, we're waiting for that new low to come in and waiting for that lower high. So I don't think a new low was actually made here, but down here it was. Right here, what do we see? We're painting a picture. Let's say the whole market, again, was screaming bearish. We have a lack of aggressive buyers to actually fill all these passive sellers and move the market up. And then as we move down, we have an aggressive seller who actually fills this passive buy offer, holds a new price, right? Holds a new lower price. So you see aggressive selling, filling passive buyers and holding a new low or just making a new low while you see aggressive buyers at the new low. So just think about this logically, right? We have a bunch of people buying, moving the market up, right? But as we approach a certain ceiling, we see a bunch of passive participants that want to hold this price. We wait on the reaction, right? To make sure it's not a take profit level. Aggressive buyers hit this ceiling, don't even get close to filling all the offers, right? And that could be okay. Maybe it's just, going to consolidate, take some time, fill some offers slowly. Sure. But market sells off. We see aggressive sellers who fill passive buyers completely. Market moves down. So these aggressive sellers get rewarded. So they're now in control. And we see more aggressive selling underneath where we have passive buyers, right? So this is very important, right? As we're moving up here, buyers might have been in control, but this right here is shifted. This right here confirmed it for us. And this retest right here, where we see exhaustion from buyers, as you can tell, buyers got smaller and smaller into a wave of passive sellers. Same thing we saw up here. So we know the seller wants to hold lower prices. This would have been the entry, right? Confirmed a new lower high, confirmed the structure from a passive buyers to passive sellers, or aggressive buyers or aggressive sellers being shifted into a new one, right? So the new person's in control, new whatever, buyer, sellers in control. And this is the retest. Remember that all the stars have to line up pretty perfectly. The next thing we can look for, right? Let's say we're playing a break retest for longs, like we just talked about, right? We get a break at this level. Yeah, buyers get exhausted. Okay, let's chill out for a little bit, right? Buyers get exhausted. Let's just wait to see what happens. Again, we don't have to wait for a shift here because the market breaking the level is already in our favor. We see now a bunch of, like a lot of aggressive sellers, right, start to consolidate right above that level we broke. We also see a huge wave, and you can tell this is bigger than the liquidity up here because it's darker, right? While you're looking at a book map, the darker it is right here, this color chrome, the more red it is, the more offers there are, to kind of pay attention to that when it actually starts hitting this, or the order book, it will give you the exact number. But, right, we see all these sellers get absorbed, and then an aggressive buyer, and then whenever we kind of see this aggressive buyer, the market moves up and actually rewards it. But indicating one thing, right, this is huge for me, we actually break through and fill all these passive sellers right here. So we actually broke through supply, closed above supply, retested, and on the retest, we see massive sell side absorption. I would get in right here. After this huge seller does not move price out right away, I would get in. I'd put my stop loss right above where we have these offers. Sure, come back down, fill some more offers, and then just shoot right up. Again, with the trend, with the sentiment, confirm volume by prices on our side. This is just the entry trigger. It's just the cherry on top. Now, will this work all the time? Fuck no. Will this work a lot more often if you combine it with the overall sentiment, combine it with volume by price analysis, combine it with every other thing we just talked about? Fuck yes, it will. So that's why when we're looking at the level 2 and time to sales, level 2 data, book map, footprint charts, very important to start paying close attention to it as we actually approach our key levels, as we're looking for an entry and what happened at those key levels in the past historically. So don't just look at the footprint chart or, don't just look at candlestick charts to kind of find your level. Look at what happened before, right? What formed that level? Was there major absorption? Was there exhaustion? Or was this just a super amount of aggressive sellers that stepped in randomly? What happened? And then we're looking for coincidences. We're looking for a story around the same exact price point, right? And again, we can go on and on looking for entry triggers, right? For instance, if we're going long off demand, this is a footprint chart showing me the exact volume per candle, per tick, right? Per time frame I'm choosing. So this instance is 5 minute. So if I'm looking for a long, right? And we kind of make a new low here, make a new higher high, right? And come back down into demand. And I noticed before, right, the first time we tapped into demand, there was absolutely no volume. Nobody wanted to take a trade down in demand. Confirms my bias to the upside. If volume's dying out as we're making new lows into demand, we know that the market does not want us to hold these lows. We know that there's nobody transacting at these lower prices. The market must make a move back up to get people to come in and play again. Again, the market's like an auction. If nobody's trading at a certain price level, especially if it's in demand, and as we move up, we see more volume come in, a great opportunity and a great sign for us to actually take advantage of that. Same thing I was talking about, how you're looking at the volume on the overall candlesticks on the bars. Footprint chart will give you a good entry trigger, because on the candle itself, if as we the wick into demand has no volume. All right, and then we make a new high, come back into that level, and again, no volume on the wick. I'm in. I'm putting my stop loss right below this level right here because I know sellers don't want to or aren't strong enough. There's not enough of them to actually make new lows because of the volume dying out. I'm in. I'm in right away, and I'm good to go. So again, guys, remember, combine everything, right? We're combining everything. And I can go on and on and on about this, right? Same exact thing right here where we see a candlestick or footprint chart, right? We have 3, this is an entry trigger I use to the T, right? 3 consolidation candles. By consolidation, I mean they all have pretty much equal highs, right? Kind of close back inside the level. If this was in supply, we see 1,600 or 2,000, whatever that is. It's pretty small here. 1,000. This is about 3,000 plus positive delta, so aggressive buyers. That would basically look like on the book map, huge green circles hitting the same high, hitting the same price point, but the market doesn't move up, right? What does that mean? If there's an insane amount of aggressive buying, not making a new high, it means that the passive sellers are in control. The passive participants are in control, right? And then the next candle gives us negative 2,000 delta and actually holds a new low. Whenever this candle would have closed, I'm in, right? For better confluences, but me personally, this third candle would have closed with this much fucking positive delta, I'm in right away, bro. I know buyers aren't, or they're strong, but the passive sellers are stronger. It looks something like this. Usually when you see, right, for instance, usually when you see this, right, you look at the book map, why I like to use both of them, both the book map and both the footprint chart, you'll see again a huge wave of those passive sellers absorbing all those offers. And I'm putting my stop loss right above those sellers. I'm fucking with them. They're strong as fuck. They showed to me they're strong as fuck. I'm in right away. I'm good to fucking go, right? Now, that for me is the definition of an A+ fucking setup. That shit drops, no news, no Trump, no nothing. I'm in, bro. I'm in for the fucking win, dude. If you'll want to see more videos on my entry triggers specifically, because there's a couple I use, but mostly it's just reading the tape at these key levels, going with my sentiment, going with my trend, and using volume by price analysis to strengthen my bias, right? Then we use entry triggers off level 2, off times and sales, off the tape. To build these levels, to kind of build the story, we were looking at the level 2 when the push happened. So I'm trading supply and demand mostly, right? So I know in supply and demand, I want to see what happened on the tape there. Was there absorption? Cool. Now the tape or the price comes back in that level, I'm looking for absorption again, or I'm looking for exhaustion, or I'm looking for volume to die out. I'm looking for something to happen that already happened in the past. And again, everything has to align. The stars have to align. If what I just told you, fucking everything looks perfect, everything looks great, you fucking drop full size on that bitch. I'm not saying full port. You just drop full size. Now, guys, before you end this video off, and actually, if you're still watching this video, comment down below fucking cheese pizza. Some cheese pizza, bro, could smack right now. I can't fucking eat cheese pizza at the moment on a diet, but cheese pizza could smack right now. But one big thing is we're halfway through the year, right? We're fucking halfway through the year already. 2025 felt like it just fucking started, and a lot of you guys have not fulfilled your promises. Haven't done the shit you want to do, right? You haven't been going to the gym every day consistently. You haven't been spending your time actually learning and trading and journaling and tracking. You've been too busy on social media, too busy playing video games and getting high, too busy going out with your friends instead of locking in and focusing on what you really want to do. And if you want to stay where you are and you're comfortable and you're happy, go for it, bro. But I'm telling you, like, if you want to get to a new level, if you want to get to a real level of wealth, what you're doing now is not going to fucking cut it, bro. It's most of y'all, it's not going to cut it. You actually have to sacrifice fun. Sacrifice time with your family. Sacrifice fucking fun, bro. Sacrifice drinking. Sacrifice weed. Sacrifice fucking playing video games. Sacrifice sleep, dude. Sacrifice fucking sleep to make this shit happen. It's not going to be forever, bro. You lock in, it's going to be hell for 1-2 years. But after that, the reward you get is magnificent. Because after you lock in 2 years, you have a basis. You have a fucking set ground. You know exactly what to do. You've been trading great. You have your opportunity. You have your setups. You don't have to spend that much time learning, that much time practicing, that much time back testing, because you have a plan that's been tested that you know works, and you have confidence in that plan because you've been doing the same thing for 1, 2, 3 years and you've seen it work. So now you're just scaling up. Now you're putting in less hours, right? Now you're putting in less time. Now you're making more money with that less time because you're scaling up. You have more money to drop. You have more size. You're going. It's the fucking snowball, bro. You start off small. Once that shit starts to fucking roll, it gets bigger, and bigger, much fucking faster, guys. So hope you all enjoy this video. If you have any ideas on the next video you want me to drop, comment it down below, and I'll see you on the next one, guys. It's gonna be a great week. I'm gonna see you on Monday morning. Let's try to make some bank, guys. You know, hopefully most of this shit has been out of the way. Gonna be a fun week. I'll talk to you guys Sunday, tomorrow, live on Kick for our charting session. I'll put the link down below. Peace out.